Morning, everyone. Name Vlad, Bobko, crisis management. Just a bit confusing practice, but it reflects Deloitte's practice. I think I have in my team probably the most exciting items. We cover the insurance and reinsurance and advice on the political violence, terrorism, political risk, structured credit, contingency, people risk, kidnap and ransom. Everything which is unusual comes to my desk. As my friends tell me, I have the best dinner party stories about insurance. Right. I'll try to go through this, and hopefully you'll find it interesting. That's a disclaimer, of course. You don't have to read. Right. Contents. Very one slide about ION. Then I will go to a geopolitical view, political violence insurance market, what we see in political risk, structured credit, and what is our experience in aviation finance, how our market is responding. ION, very short. I'm not sure everyone is aware because it's a corporate jet conference. We are risk and insurance advisors, insurance brokers. We have three major items. We do risk, retirement advice, and health advice. I'm from the risk part. That means that we place insurance and reinsurance, and we give our clients advice. We handle around $120 billion insurance premium, and we do it through 120 countries around the world with 50,000 colleagues. Now, going to the content of presentation, geopolitical view. I try to split it to the 5 major items, which is political, economic, social and security, technology, and legal. Political, world in transition. You recognize the flags. How we see it? We see that the waning US influence will continue. It will be dominated around the world by 2 major countries and their trade. It's US and China. With all respect to EU and others, we all will be kind of subjected or dependent on how these 2 major powers resolve their issues. We see the growing Chinese footprint. Also, we see, as everyone well covered by press, global retreat from multilateralism. Usually in geopolitics, you have each government employs 3 major tools: military, diplomatic, and economic. What we've seen in current US administration, they retreated from military and diplomatic, and they're very widely focusing on economic tools in order to get what they think is right for US. Next. Economic. We're finishing the decade on the low growth. So we see the still long-term trade conflicts. We see the slowing global growth, increasing global debt, as my previous colleague said on the stage. And we see more countries will suffer, especially the ones who are dependent on commodities. Why it's important for our presentation for political risk and political violence? Because when the economy goes down, a lot of people around the world will earn less money. And what happens then? We will have social broken contracts. What it means is that if you look at the many countries around the world for the last 50 years or 100 years, look at the Greece, as a population and the governments, there's a fine balance between government and their countrymen about social contract. We work hard. In exchange, we expect government to give us health care, security, our children go to the school, and we think and hope there is something better life for our families. And it's all based on the economic growth. The moment economic growth goes down, a lot of dreams or hopes will go down as well. And as a result, you will see that people becoming unhappy. So what happens then? We see the rise in social unrest. We see economic inequality. Protests are increasingly becoming facilitated by social media. They become without leaders and quite violent. The most important, any protest, any issues in the countries, they're becoming more difficult to resolve because you can't address one group concern without ignoring that means that you ignore others. It's interdependency. You can't just say, for this group of people, we will meet your demands without kind of damaging other group of people. And also, long-term solutions usually politically not possible. Security. The violence is on the rise. We issue every year terrorism, political violence, and political risk map online. I think this year we are launching on the 4th of March. You're very welcome to log in and at your spare time. But what we see overall, we see that increased global insecurity, usually created by weak governance, geopolitical maneuvering. We see international flashpoints, Iran, North Korea, Russia-Ukraine conflict, Venezuela. Then we go to political violence. We see Chinese repression, we see terrorism, ISIS, right-wing extremism. And recently, the last one is the criminal violence, which is a prime driver of death. If you look what happened for the last 16, 18 months in the countries like Mexico, Colombia, where the rise of the criminal just been extraordinary. Same goes to Nigeria, South Africa, Libya. Digital battle space. Technology. Technology becomes a geopolitical competition. It's not anymore just a private issue getting the disruptive economy and makes our life easy with Amazon Internet. It becomes huge geopolitical battlefield. We see every country or major countries going, it's a race to master 5G, artificial intelligence. We see conflict in cyberspace. We see increasing use of technology to prop up authoritarian governments around the world. Vulnerabilities. We see a lot of attacks, exploits, disinformation, IP theft, weaponization of information. Meanwhile, it does create opportunities. We see new capabilities, and we see smart grids, cities, and infrastructure, which can be enabled in much efficient way. Legal. Challenging regulatory slope. Regulatory becomes as a competition because the institutions who are supposed to mediate conflicts, their role is diminishing. That's why we see the regulatory becoming as a competitive tool, and we see the rise of the dueling standards. WTO role in question, what shows us recent trade conflicts, whether it's China, US, or others, that role of WTO in the big question, how they can mediate various trade conflicts on the legal mutual basis. Now, political violence insurance market, we around our clients in London, around 3,000 corporate clients who buy terrorism and political violence around the world, from US to Japan. That's what happened last year. Chile, and as I mentioned in the previous slides, as a result of slowing economy and social contract broken, we've seen things developing overnight in the countries where no one would thought something like that happened even 3-4 years ago. The major example was Chile in the fourth quarter last year. We estimate that only insurable losses was $3 billion. And we are not talking here about non-insured economic loss to the Chile economy. Hong Kong, we think it's around 500 million to the market. Sri Lanka, even there was awful terrorist events, but insured values were quite low, so it's only 50 million. And Colombia, riots and civil commotion, 20 million, just because of the low penetration of insurance. We think it's just a flip of the iceberg because it's just insured values, something which we've seen through our books, and we are dealing with the claims. But as I said, the bigger uninsured economic loss is much higher. Political risk structured credit insurance. It's a bit technical, but I will try to go very fast. Colors. Yellow color, it's a single risk. That means when we insure private counterparty default. Green one, sorry, the blue one. Blue one is when we insure default of sovereign, sub-sovereign counterparty. It's usually Ministry of Finance or government-owned entities. And green one, it's asset protection in the host country where we place insurance against confiscation by host countries. And in your case, it could be a repossession of the confiscation of movable assets like aircraft or its engines in the warehouse. What happened why the market went so up? In 2008, when we had financial crisis, as a previous speaker told, the governments and central banks went very tight and they imposed huge restrictions on the banks and in terms of the counterparty limits, and banks started to buy much more insurance on the counterparty risk in the private insurance market. That's why you saw huge growth from 2008, and we now can do the maximum around 2.8 billion per transaction. Also, we've seen tenors increasing. The largest deal my team did, it's 17.5 years tenor on the project finance deal, including construction and grace period. Last slide is what we see in the aviation space. I must say that we haven't done as an industry much in the corporate jet space. Usually we are quite active. Recently we've been quite active for commercial airlines where our clients are either banks who are financing commercial airlines or leasing companies. And we do usually, like as I said, two major products. Our industry is counterparty limit, counterparty default, non-payment basically, or confiscation, non-ability to repossess your aircraft. The industry addressed the growing airline market very well. There are well-covered structures which was done for Boeing and Airbus, mostly for new airplanes. But as I said, the corporate jet market haven't been on the radar. So I think it's an opportunity. And hopefully, I think the insurance market is quite innovative. We have enough capacity and brains to deal with this. And hopefully, after commercial airline segment, will be enough interest in products innovation to help corporate jet and everyone who is in this audience, whether you're financiers, leasing companies, or the owner of the planes. I think that's it from my side. And I'm happy to take questions, if any.
That's great. Thank you very much. Do we have any questions from the room or on Slido? I guess one question that many people are thinking about at the moment is coronavirus. And I know that doesn't necessarily fall into your area, does it?
Yes and no. On coronavirus, I think I can compare it to SARS in 2003, 2004, when there have been, as an insurance market, we excluded this from policies, and slowly over the last 10 years, it's kind of creeping back. But as a sub-limits into your major property insurances, where we've seen like $1 or $2 million sub-limit, where you would cover your loss of profit due to the contingent viruses or national emergency. As you can imagine, now it's kind of complete stop of any of that. But it started a bit earlier. If you look at last year, it started with the African swine flu, which affected a lot of pigs, pork. And the first country who experienced was China. 300,000 pigs were slaughtered in China last year. And since July 1st last year, it was impossible to insure African swine flu for any pig production starting from China, then even in Western Europe. So I think we still need to see how it develops. But from insurance point of view, it's almost like the house is on fire and you can't buy insurance.
Do you see it reducing political risk, that people won't be protesting in countries if there's a pandemic?
I think I'd like to be optimistic, but I think if the economic growth will continue to be sluggish or going down, I think we might see more. And I think as long as we all jointly try to keep economy up and consumption up, that will create more jobs. And as a general mass of population around the world can meet their needs and fulfill their dreams, I think it will be less chances for such political violence events which we've seen last year.
And another question from the room. Who are the insurers willing to cover confiscation risk?
We have 72 markets, mostly Lloyd's. So it's a Lloyd's and Company markets. It's London, mostly. Lloyd's in London being quite, historically, quite innovative in the different items, especially in the unusual risks. Just to give you an example, a bit of the cheerful. I think some of you have seen, around 2 years ago, American guy jumped from the plane without parachute, sponsored by Red Bull in US from 25,000 feet. And the idea was that he will hit the net on the ground. I think it's 100 feet on each side. And his wife asked for insurance. So when I went to the market first, I've been told, get lost. It just because the guy never done it before from such attitude. And you can't even see the net. And take into account the wind, as you know from aviation. So in the end, we managed to place insurance. It was 2 minutes. People took a net line, so we placed with 70 markets. People took 0.51% line. It was almost back to early 90s, where people didn't have huge balance sheets. They just they took the risk on their own net cash. And so he survived. We still don't know whether his wife happy or sad. But the return was huge. We were all sitting on the computers because the guy had a live camera. It was YouTube. It was 2 minutes flight. And Lloyd's got huge return. But for this kind of risk, that's where London and Lloyd's is fantastic, because they take the risks which usually your primary geographical markets in US or Japan are not keen. So I think to answer your question, it's Lloyd's in London. They're usually on the front for every unusual risks.
And following up on that, would you get confiscation cover for Saudi Arabia?
Yes. Yes.
Okay. Thank you. Brilliant. That was great. Thank you very much, Vlad.